Hey there, YouTube family. As you can see, I'm finally back into my studio. I feel so much more comfortable. I'm looking forward to great content that I'm preparing for you guys this week. I think this is an important week. I want to start off today by referencing one of the last videos I did that I said, because of that thrust signal, we have the potential of slightly understanding what might be happening going into this week. I predicted to you guys on Wednesday that Thursday and Friday would fall hard, and also that it's likely that we would fall Monday. But if the scenario that we looked at were to come to pass, then it's possible that by the close of Monday or somewhere in the course of Monday that the market could begin to turn around and then potentially move up either Monday evening, Tuesday, Wednesday, and Thursday morning before the inflation report comes out. Like I said, this is speculative. I like to have a plan going into the week, and that's my current plan. I will share with you guys at the end of this video what I bought. I'm just going to go over quickly the jobs report with you and interpret that from my point of view. And at the end, I'm going to give you my conclusion of what I bought in some of our trades. Real quick, please hit that like for me. If you enjoy this content and if you find value, don't just walk away at the end of the video. Hit subscribe, hit the notification bell. Be part of this family. We're bringing attention to opportunities and stock, and we're teaching technical analysis here, so come join us. So yesterday's job report came in good, which was showing that more people were hired in September, which for all of us should be great news, right? Well, everybody believes that it is going to greenlight another record-raising 75 basis point by the Fed, with, of course, his goal of combating record-high 40-year inflation. So what happened was the rate of unemployment dropped to 3.5% in September, and that was from 3.7% in the month of August, which simply means that more people got jobs in September rather than lost jobs. And the average earnings, which is a huge issue because you hear that a lot by the Fed, the wage spiral, it also rose in September. Wages increased by 0.3% from August, and they were 5% higher than the exact same time last year. All of this data is still showing that the mechanisms that are contributing to out-of-control inflation are still red hot. Okay, I want you guys to imagine with me that the economy is like an old-time runaway train. And on there is two conductors. One is in charge of shoveling coal into the engine to make the economy move. The other conductor is in charge of controlling the brakes and keeping an eye on the speed and making sure that the train doesn't get derailed by moving too fast. Okay, so in all this time, the guy that's been shoveling coal into the engine is like the government. And the coal is cash. It's cash getting pumped into the economy, making it red hot. And the more cash that's put into it, the faster the economy, aka the train, will move. The job of the Fed is to make sure that we are not moving at an unsafe pace, which clearly we have been moving at an unsafe pace because we are going way too fast, and that's measured in inflation. And so it's his job to grab the brake and to pull it. Now, we just had the jobs data report. And what that is like the speedometer that tells us how fast we're going. And unfortunately, as I've said before, this economy is like we've been moving 100 miles an hour, and all we've done is pull back to maybe 90 miles an hour. We have not slowed down enough. Matter of fact, the jobs report would be more like we went from 100 miles an hour and we were expecting to pull back to 65 miles an hour, which might be considered safe, and instead we're now going 101 miles per hour. That's what the speedometer just told us. And so the Fed is saying that he's going to grab the brake. He actually hasn't done it yet, but he's actually pre-warning the economy. He says, I'm going to grab the brake, I'm going to pull it hard. And when he does that, what happens is all the passengers, which represent all of us that are sitting in their seats, if they're not properly prepared for him applying the brakes to the runaway train, then a lot of them are going to get jostled and thrown out of their seats. That's sort of like the unemployment that he talks about. Now, he's been having this conversation with the guy in charge of communicating to the passengers to get themselves situated, prepare for the coming break, and letting them know you might even want to brace yourselves. That's the media. They're telling all of us, we've got a recession ahead of us. We are moving too fast. We're going to have to slow down. People have the opportunity to get themselves positioned to raise cash, which is something that we talk about, pick up extra hours right now and make sure they've got their savings in place. That would be like bracing yourself in your seat. But when the Fed goes and he grabs that brake and he pulls on it hard, there's going to be a lot of people that fall out of their seats. And there's this conversation between the media and the conductor, and he's telling them, I am going to apply this brake. We are moving too fast. And he's letting them know that if some people lose their seat for the sake of us slowing down the train and us not derailing, that's okay with him. It's not that he wants people thrown out of their seats, essentially laid off or become unemployed. It's that he would prefer for some people to lose their seats than for the entire train to roll off the track and for everybody to be thrown. That would be a major recession, a great recession, or a depression, which we really are looking at right now with all the dynamics of things that are going on around the world. Now, this makes sense to all of us. Could you imagine a car that was designed with only a gas pedal and not a brake? It would be impossible to navigate the roads safely. And the economy is absolutely no different. The Fed is in charge of putting that brake on, slowing things down. If he does it too strong, then it's going to jostle people. They're going to be thrown out of their jobs. It's going to affect companies. That's the reason why the NASDAQ has fallen as hard as it is because the NASDAQ has a less secure seat. And then we talk about blue chip stock or value stocks like Costco or Home Depot or Walgreens. Some of those companies are sitting securely in a nice seat with their seatbelt on. And that's why people take a flight to better seats. Now, you might be standing there. You might not even have a seat. You might be just holding the pole in the train car. And when he jostles it, you're likely to really get yanked. But it's time for all of us who have a foresight into this and a good understanding to get ourselves positioned so that when that brake gets applied and when the economy slows down, we're actually positioned to get a better seat. Somebody else, some other corporation might lose their seat, right? They might get flown off and we might have the opportunity to sit down. And I think that's the real opportunity that's ahead of us. That's the best analogy that I could come up with. You wouldn't want a car without a brake. And what the Fed is doing is appropriate. And if you are mindful of it, if you're aware, if you're eyeing the seat that you want, that could be to take a big position in NEO or Alibaba or Apple or Google or Tesla, that opportunity is coming up. That seat was too expensive. You know, I've been flying around and occasionally I take Spirit Airlines and they always give you the opportunity to get a better seat. You got to pay for it, right? But imagine right now that those seats are getting ready to be unfilled. First class tickets are getting ready to be empty because people are going to get thrown from them. And you're going to be prepared and you're going to have what you need to go ahead and lay the money down and take that first class seat. I want you guys to be thinking about that because that's what this data report tells me. It tells me that the economy is too fast. It tells me the Fed is absolutely going to apply the brakes harder. And it tells me that a lot of people are going to be jostled and they're going to be thrown. And that does translate to an opportunity for people that have their eyes wide open right now. And that's you guys. We're building a great community here to get positioned to protect our wealth and build wealth right now. We are not waiting for a future date. So join my family. I do a lot on the MooMoo app. It's an exchange. If you open up and fund an account, you can get 15 free stock valued up to $30,000. If you put in just $100 right now through my link, they will give you 6 stock, each one potentially valued up to $2,000. You can find me on that app under Stocks with Josh, where I do interact in the comment section and answer questions for you guys as much as I can. Check the description of the video for the link to MooMoo. All right, I want to cover with you some of the purchases that I made on Friday as the markets fell pretty hard. In my mind, they were really picking up some speed, and there were some stocks that I've been eyeing and wanting to get into for quite a while, and I took some positions. I did start doing some buying, and I bought Alibaba options, Norwegian options, and Las Vegas Sands options. I did not take a full position. I took a partial starting position. In my years of experience with option trading, I take an initial position and I let it go a day. I'm not a knife catcher or bottom catcher. I keep hearing a lot of people talking about Meta and other companies like that have not bottomed out by any means. And I just think that it's extremely risky. And I get the fact that if you've been in it for a while, you view the current price as being massively on sale. But we're looking for things that are currently sitting higher than they were on the June lows. I've consistently talked with you guys about that. Some of the investments that we've made, like Verb and SBet, are currently down. But I always say they are higher than their June lows. And so that gives me some confidence that they're not going to be absolutely flushed and destroyed right now as the market pulls back, but that we're likely through a phase of accumulation that they had been significantly flushed out and oversold earlier. Those are the types of things that we keep our eyes on. So in addition to that, I did buy some Verb at 0.43 cents. I will tell you all that I think that if we get volatile days ahead of us, Verb is likely to go and hit its last level of significant support, which was 0.39 cents. Now, I could have waited, put my buy order in at 0.39 and just caught it there, but I do systematic buying because I can't assume that it's always going to do what I think it's going to do. So I bought some at 0.43 and I will buy a little bit more at 0.39, and I will be hoping, like the rest of you, for a nice solid bounce back up to 50 and then higher in the days ahead. We saw the last time when the markets were actually falling, Verb was actually going up. And so if Verb has truly bottomed out, and if this is the place of accumulation, then I imagine that even if the market falls apart, it may not break its all-time lows, but instead will move up on really bad days. I also bought a company called Fuel Cell. I imagine a lot of you are familiar with it, FCEL. I've been eyeing Fuel Cell for a while, and I've been wanting to accumulate it. It has had some good price action, and where I bought it, it pretty much has stayed flat and closed into the evening. If it goes down a little bit more, I will buy a little bit more, and that's going to be a little bit of a longer term hold for me. It's not so much a swing trade or a day trade. It's going to be a little bit of a longer hold because I am liking the company and want to accumulate there. I believe there's a lot of opportunity for them. Both Fuel Cell and Verb stayed flat on the day from where I bought them. The Las Vegas Sands, Alibaba, and Norwegian all went up into the final moments of the close quite a bit, or at least 20% into the close from the exact price in which I purchased them. I will probably add to those positions a little bit and be looking for them to become more profitable leading into the inflation's report. This is my speculation. I am not telling you guys what to buy, sell, or hold, but if you watch this channel and you see some of my logic and some of my understanding of the charts and some of my decision making, and you see how these trades work out for me, then you guys might learn something. You might learn what not to do. But I'm giving it to you guys. That's what I've promised to do, is to take you on the journey, go on the journey together. That's what we're doing. So as I've said, hit the subscribe and the notification bell. Don't miss out on the journey that we're doing together. I'm laying a foundation of trading knowledge, investing knowledge, as well as technical knowledge through simple understandings of charts and candlesticks communicated in plain English. I'm going to leave you guys there. Peace and blessings, my friend. Have a blessed Sunday afternoon, and we'll talk some more tomorrow. Take care.